Hello and welcome to the Weekly Market Outlook. My name is Stanislav Bernukov. I'm a Senior Trading Specialist at Exness, and today we have a special guest, Andreas Amistocles, also Trading Specialist at Exness. Hello, Andreas.
Hello, Stan, and thanks for having me. Hello, everyone, and thanks for joining us.
Before switching to this week's idea, let's watch the performance of the previous week's idea. It was a potential buy for GBP USD. This idea was not triggered due to the publication of news, which unexpectedly turned the price down. So let's switch to this week's idea. Andreas, what's on your mind today?
So my attention is shifted on the Australian dollar against the Japanese yen for a potential long position with a target around the 92 price area. The price found support on the 100-day moving average in late last week and is currently trading in an upward moving channel.
What is the narrative behind this idea?
Okay, so if we take a look at the 10-year bond yields of Australia and Japan, we will notice that the Australian yields have rebounded to the upside, while the Japanese have declined from the yearly high of 0.5% to 0.4%. This means that the capital is flowing more aggressively in favor of the Australian dollar compared to the Japanese yen. Also, if we take a look at the daily chart, we will see that for the past 2 months we have consecutive trading buying sessions with a short-term correction to the downside. Also, the stochastic oscillator is not recording any overbought or oversold levels, meaning that the past pattern of the previous 2 months has the potential for the move upwards in the near short term. The 92 level is not any random number, it's a very strong technical resistance area, which consists of the 50% of the weekly Fibonacci retracement level, and it's also an inside resistance area since early March of 2023.
Okay, speaking of economic publications, what do you think might affect the price this week?
So in terms of economic data, we have the Australian unemployment rate publication coming up on Thursday, May 18th, where the market expectation is that there will be no change on the figure, which is in an already near the all-time low, whereas a further decline will substantially boost the Aussie in the short term. On the same day, we have the Japanese inflation rate, where again the market consensus is for a no change. The consensus is for 3.2, exactly the same as the previous publication. But in the unlikely event that we see a significant variation on the figure, it will most certainly create volume on all of the yen's pairs.
Alright, in summary then, for this week we have the idea of potential buy for Australian dollar versus Japanese yen as it's moving within a technically strong trend located near the support area. It's driven by the discrepancy between yields of Australian bonds and Japanese bonds, pushing carry trade operations forward. Economic publications to focus on are employment for Australia and inflation for Japan. So don't forget the volatility may boost during the time of the publication. Thank you, Andreas, for this idea.
Thank you, Star, for providing me this opportunity.
Don't forget, this is just the idea. Do your own research and never forget to manage risk.